and at this time we will call the meeting of the Kansas City Commission to order. And with that, Commissioner Ward, please lead us in the invocation.
Sure. Y'all bow with me. Heavenly Father, I just thank you for this community. Thank you for all these people that are wanting to serve, and I just pray that you help us to make the best decisions that glorify you. Just help us to look to you for everything that we do.
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
All right, that takes us to the approval of the minutes of the meeting of February 14th, 2022. Second. We have a motion and a second to approve the amendments as written. All in favor signify by raising your right hand. Opposed, like sign. The motion passes. All right. Takes us to public comments from interested citizens.
Nobody has signed in here.
All right. Thank you. All right. Then item number 6 is consider and take appropriate action on the audit of the financial statements of the Canyon Economic Development Corporation for the year ended September 30th, 2021, as presented by Dozier, Pickens, and Francis.
Mayor, we have, Joel has gone over to my office to get the copies, so can we switch the city audit with, switch those two items on the agenda?
There he is.
Oh, never mind. Okay.
We can if we need to, but
I have one, Joel. I don't need one. I have one. Do we have electronic?
yes.
Did we not?
Mitchell.
Oh, we gotta love these last minute snafus. Well, good evening, ladies and gentlemen. My name is John Maris. I'm the audit partner with Dozier, Pickens, and Francis, your external auditors. I guess you're going to get to hear a lot of me tonight going over the EDC and the city's audit. But before I begin, I do want to thank the Commission for allowing us to come down and serve the City of Canyon, and Evelyn's board for serving the EDC in that capacity. It is always a great pleasure to get to work with not only Evelyn and her staff, but Joel and Joe and the entire staff of the city as well. You've got a good group of people here. I'm going to be singing their praises all night long. Okay, so for now we're just doing the EDC. Page 3 of the of your booklet here. I'm not going to go over the audit letter because I'm going to hit that in some detail when I do the city's audit, and it'd be very redundant, and I don't want to waste too much of your time. Gretchen's already told me before the meeting began that she has me on a clock, so I'm expecting a hook at some point. All right. Page 3, the statement of net position, effectively the balance sheet of the EDC. You can see at the top of the page, they ended the year with $513,000 of cash and cash equivalents. That's down approximately $46,000 over the previous year, not a really big change. The $898,000 of investments, that's primarily the cost of the 1600 block property, or 1600 4th Avenue block property that they purchased, and the improvements they put into that. That is about $36,000 over the previous year. Prepaid insurance of $18,400 is up $17,000 over the previous year. They went ahead and prepaid all of their 2022 insurance policies in September. That's what the increase there is. Really everything else is pretty consistent with the previous year. Their net position at the bottom of the page, $1,241,000. If the EDC were to take all of their assets, convert them to cash, pay off all their obligations, that's what they'd be left over with. They saw a $77,000 increase in that net position. Over on page 4, the income statement, the biggest changes there, and I'm going to be reiterating it with your audit, is the sales tax number. They broke $1 million for the first time since we've been coming down and working for them. It's up $110,000 over the previous year. Rental income is up $55,000. That is the Joe Taco contracted increase in their rental agreement. As far as expenses go, in the middle of the page, their expenses of $1,038,000 are up 29% over the previous year. The lion's share of that is sitting in the economic development projects. They spent $750,000 on various projects, which is their purpose. So you want to see them having a significant number of projects going on. The other big increase is in salaries and benefits of $199,000. That's up $42,000 over the previous year. That's really kind of what's going on with the EDC. Page 5 is their statement of cash flows, just lets you know where their cash came from and what they spent it on. Walks you all the way through that decrease of the $46,000 that I talked about. As far as the notes go, the ones that I think would be of the most interest to the Commission would be note number 6 over on page 12. This is the discussion on their long-term debt and what they've obligated themselves for. You can see where they began the year, the payments that they made, and where they ended the year. And then at the bottom of the page there, the long-term commitments or cash outflows that they've obligated themselves for going through 2030. The Highway 60 note is the payments to the city for the land that they bought, that they owe you for. Everything else is the notes that they took out to buy the 1600 4th Avenue block properties. And that brings us to their commitments. Notes number 8 and 9 on pages 13 through 16 is all of their current and future commitments. The chart at the bottom of page 13 is at $750,000, so you can see exactly what they spent those funds are on the various projects. And then note number 9 are the long-term commitments that they've obligated themselves for, and we broke it down each paragraph with a separate commitment. And the last sentence of each paragraph tells you what the remaining commitment is on each one of those projects. Whether it's been partially funded and what the remaining commitment is, or if there's been no funding on it yet, or if it's been fully paid off in the case of a couple of them.
John,
short and sweet and to the point, but that's
John,
really...
On note 8,
Yes, sir.
the years to the left, is
Yes,
that
sir.
the inception of those projects?
That is the inception of those projects, yes, sir.
The annual amount on the right is what came out this audited year.
That is correct, yes, sir. So you can see that you've been funding Lone Star for several years now, and the $85,000 is just the current year portion. That actually ties back over to the future commitments too, and the very first paragraph is Lone Star. So you can see that that year, or that commitment began during the September 30th, 2015 year, and that there is a remaining commitment of $510,000 on that agreement. So you kind of have to look at those two notes in conjunction with each other to get a really good picture of what they're doing as far as their projects are concerned. That's the EDC in a nutshell. I tried to keep it short mainly because I really don't want to get a hook around my neck. But are there any questions or concerns that I can address for you this evening in regards to the EDC? Crickets. Either I put everyone to sleep or I did a really good job. I don't know which. That's all that I have for you, Mr. Mayor.
Okay. Any questions for John on this one? So, I think this one's been cut and dried.
Yes, sir. This one is very just boilerplate. It's really clean and simple.
All right. If there's no more questions then, I would entertain a motion to approve. Or not approve. Audit for the HCC.
So, second.
To approve. Have a motion second to approve the audit for the Kenyon Economic Development Corporation. All in favor signify by raising your right hand. Opposed, like sign. That motion passes.
Thank you, sir.
All right. That now takes us to item number 7, to consider and take appropriate action on audit of the financial statements of the City of Kenyon as of and for the year ended September 30th, 2021, as presented by the Finance Director and Dozier Pickens.
So I'm just going to give a quick introduction of what the audit is, what our part is, and then what John's part of, what Dozier Pickens and Francis' part of it is. The financial statements are actually our responsibility. We're responsible for the internal control, the accounting system that goes to producing this financial statement. Their part in it is to audit the financial statement and have an opinion on whether the audit presents fairly in accordance with GAAP. Our work on it started really about mid-November is when we started really prepping for the audit specifically, but it really depends on what we do day in and day out throughout the year. As to the accuracy of the amounts and of the systems that are in place to produce the balances that wind up in the financial statement. So we've been working with Dr. Pickett. They were here the last week of January for the field work, and we've been working with them since then and clearing up questions and getting the report produced. And so with that, I'll turn it over to John to present the report.
Excuse us for a second, John.
Take your time. Do you want me to go ahead and present while y'all are eating? Yeah, once you get settled.
Go ahead, John.
You're just trying to put them all to sleep while I talk, aren't you?
Try it, though.
Okay.
Yeah, so you won't feel too bad.
We'll get a warm glass of milk and cookies after this.
There we go.
Do it straight now.
Okay. To kind of reiterate and continue the comments that Joel was making, if you'll turn to page 1, this is our independent auditor's report. I'm not going to go over this in any great detail, but I am going to hit the highlights for you just so everyone is aware exactly of what we're doing versus what the management of the city is doing. Starts off talking about what we've done. We have audited the accompanying financial statements of the governmental activities, the business type activities, the discretely presented component unit, each major fund, and the aggregate remaining fund information of the city of Canyon, Texas, as of and for the year ended September 30th, 2021. The reason why that's phrased that way is we're actually issuing several different levels of opinions. The governmental activities are all the funds of the city aggregated together into a singular unit with all of your long-term assets and liabilities presented. The business type activities would be your utility fund, your water sewer fund, and your golf course. The discretely presented component unit is the EDC again, and then each major fund is coming down off of that comprehensive government-wide presentation, closer to what you're used to seeing on a day-in, day-out basis. The general fund and the other funds of the city on effectively a cash-in, cash-out basis. You won't see any of the long-term assets or liabilities presented there. The reason why we break everything down like that is actually so we can design our testing and our materiality levels at each one of those different reporting levels to get a good comprehensive audit of the city and make sure we have a grasp on what's going on as far as all the operations go. Management's responsibility, this is Joel's absolute favorite. It's the one that puts him on the hook. The management of the city is responsible for the preparation and fair presentation of these financial statements in accordance with accounting principles generally accepted in the United States of America, including designing and implementing internal controls to ensure that they're free of material misstatement, whether due to error or fraud. What that translates to in English, because I recognize that was not English, is that these first 2 pages are mine. The rest of this book is his. The reason why I have to point that out to you is because the Government Accountability Office, the lovely folks in D.C. that write the standards that I have to abide by, are making a pretty serious push to state by sitting and preparing your financial statements with the book that we are impairing our independence. Our professional response to that is that's simply a load of hooey. We've taken your numbers and put them into a prescribed format. What they ideally want to see happen, though, is that we walk in and Joel hands us this book, and then we just do our procedures and put our letter on top of it. I really hope that we don't have to go that route. Y'all are very uniquely positioned to where you could handle it. Joel's got all of the required expertise and training to do that. Outside of y'all in the city of Amarillo, I don't know of anybody else in the Panhandle, besides the counties, that could do that. So I'm really hoping we can continue to do what we've always done in the past, which is we go ahead and prepare the booklet. We have Joel and Joe sign off on what we call a management representation letter. It asserts to us that they have read through and are willing and able to accept the responsibility for the financial statements. Also that everything was made available to us. Nothing was kept hidden or secret, so that we could complete our audit appropriately. Okay. The auditor's responsibility section, I've kind of already touched on it, but it's simply to express opinions on these financial statements based on our audit, and then it tells you the standards that I use to conduct that audit. At the bottom of the page is our opinion. And it's the cleanest opinion we can give. We state that your financial statements are materially correct and are present fairly in all material respects the financial position of the various levels that we've already talked about. It's the cleanest opinion we can give. Joel's doing an excellent job at keeping a clean set of books for you. I think we had one whole journal entry for him. Outside of the retirement plan valuation stuff that only hits annually anyways, we had one kind of clean-up type journal entry, which is unheard of, especially in an organization or a city your size. He's keeping a remarkable set of books. All right, the other thing that I have to draw your attention to is the last paragraph on page 2. In accordance with government accounting standards, we have also issued a report dated March 3rd, 2022, on our consideration of the city's internal control over financial reporting and our test of its compliance with certain provisions of laws and regulations. I'll get to that in a little bit more detail at the end, but I do want to show you that we are reporting that the letter is included as well. All right, TDS steps out of the way, let's talk numbers. Page 11 is the city's balance sheet, 11 and 12, your statement of net position. I don't know what PDF page it is to tell you, I'm sorry.
Oh, that's okay.
It's going to be a little bit back.
34.
There we go.
34?
Yes.
Thank you.
I think you meant 34 out of 200, ma'am.
PDF page.
Yeah, PDF page 3.
That's not it. Go back. Should say statement of net position at the very top.
Yeah, in your top left-hand corner where it says of 200, you're looking for 34, ma'am. You're very welcome. It would be so much easier if the PDF page and the page number lined up. Okay. Just to refresh your memory on how this statement reads, you have we have all of your assets on the left-hand side and the liabilities and net position equity on the right-hand side. The columns, your governmental activities, are all the general fund and all the governmental type of funds aggregated together. The business type activities, as I already said, is your water and sewer fund and your golf course aggregated together and coming into the total. And then off to the right, almost like a forgotten child, is the EDC. But that is where it is presented as well. Oh, it's supposed to be a joke. You didn't even give me a courtesy smile. Okay. I've got to interject some humor just because I know how dry this is. Just bear with me. For the city, the total column is really what I'm going to be focusing on because that's the city comprehensively. You can see at the top of the page you have cash and cash equivalents of just shy of $10 million, $9,951,000. That is up approximately $4 million over the previous year. The lion's share of that is the ARPA money, the American Rescue Plan funds that you received that you had not spent yet. It was just over $2 million. Then you saw another $2 million increase in cash, $1.1 million of that in the the general fund, and $825,000 of that in the utility funds. The rest of your investments, restricted cash, didn't really change too much until we get down to the restricted cash for construction. In the utility fund, you spent all your remaining restricted cash on construction type projects. That's down $500,000 from last year. So it's just about completely spent, leaving all your cash as pretty much unrestricted. The other items that changed significantly over the previous year, the prepaid items of $130,365. That's up about $116,000 over the previous year. You're purchasing some water rights for pending developments and exploration of water rights, I guess I should say. That's what that increase is. Your fixed assets, capital assets there in the middle of the page, are up about $4 million over the previous year. A fair chunk of that, and we'll get to it in more detail in just a minute, is contributions from developers on infrastructure. That's a large portion of your current year increases. Your deferred outflows didn't really change, so we'll jump over to the liabilities on the next page. There we go. The intergovernmental payable of $2,017,961. I wanted to point that out specifically. That is the ARPA money, the American Rescue Plan funds. The reason why that's presented as a liability is actually the guidance from the Treasury Department. They stated that until you spend the funds, you should not recognize it as a revenue, because if you do not spend the money, it's owed back to the Treasury. So until you actually complete the projects that you've designated it for, it's going to show up there as a liability. As you complete those projects, it'll be moved and recognized into revenue at that time. The rest of the changes here, your contingent liability of $1,030,000 is up $574,000 over the previous year. This is the Lone Star money that if they do everything that they claim that they're going to do, you will owe back to them. Hopefully they will do what they need them to do. And then your non-current liabilities, specifically the due within a year and due in more than a year, there is down $1.7 million. You've made all your debt payments, and there's a chart in the notes that will go into more detail on that. As far as the equity, the net position at the bottom of the page, the unrestricted amount, that's, again, as I said with the EDC, if the city were to take all of your assets, convert them to cash, pay up all your obligations, this is what you'd be left over with. The citywide total of $3,056,000 is up approximately $541,000 over the previous year, so you increased your reserves a fair amount. As far as your income statement on page 13 goes, Everything actually is really pretty consistent year over year. You did increase your expenditures a little bit, almost $12.5 million in the governmental activities. That's up about $700,000 over the previous year. The utility funds, $233,000 increase, or about 3%. Really, those are not significant increases, and there was no one line item that attributed to it, any of it. I will point out that capital grants and contributions column, the $3.1 million of highway and streets and the governmental activities, and the $2,257,000, those are your developer contributions that you recognize as capital contributions. Property taxes of $3.4 million, or up approximately $155,000. Your sales and use tax, you got the same increase that the EDC got. You recognize $3 million of income, that's up $332,000 over the previous year. Franchise taxes are up $313,000. Everything is kind of going the direction that you would want it to. Citywide, change in net position, or in business terms, net income of $6.5 million is actually pretty consistent with where it was last year. The general fund is up $3 million over the previous, or up $2.5 million over the previous year. That's primarily the capital contributions, and the utility fund is down $1.7 million to offset it. And what that is Lone Star's penalties last year that you recognized when you started the new agreement with them. That obviously didn't repeat, and now it's all going into that contingent liability. Coming across to the total, everything stayed pretty consistent. Starting on page 14 is the fund level presentation. You can see the general fund, capital projects, the other non-majors. I won't get into these statements in any great detail because this information is pretty much exactly what we've already discussed. I will point out that you won't see anything related to your fixed assets or your pension plans here. As I said, it's effectively cash in and cash out. Pages 15 and 17 are the reconciliations between this fund level presentation and what we've already gone over. So if you'll turn with me to page 20, this is the income statement on your utility funds, but broken down by fund. Yep, perfect. But broken down by fund so you can see exactly how the water and sewer fund operated and how the golf course operated. If you'll look in the middle of the page there, the operating income, you can see that the water and sewer fund had operating income of almost $2.2 million. If we take the depreciation expense, which is a non-cash expenditure, out of the equation, it would have had a net income of $3.5 million. On the golf course, same type of story. It had a net loss for the year of $347,000. If we take the depreciation expense, which is again non-cash, out of the equation, the net loss would have only been $146,000. Again,
Can you repeat that?
Yes, sir. So the operating income of $2,177,000 for the water and sewer fund. If we take the depreciation expense, which is a non-cash expenditure, and you can see that number about 4 lines above it. If we add that expense back into the equation, your operating income, basically from cash operations, with some changes in payables and receivables, but it's a good barometer, would have been $3.5 million in the water sewer fund. For the golf course, you ended the year with an operating loss of $347,000 in the middle column there. Again, if we add the depreciation, which is non-cash, back into the equation, your cash loss would have been only $146,000.
I think that's the best year I remember on the golf course.
It really is.
In quite a bit.
I didn't go much past the previous year, but I think you're exactly right. I'm usually up here questioning why y'all have a golf course, but this year was a pretty good year for it.
It was very good.
All right.
I know.
Tell him, Paul.
It's a quality of life issue. You have a golf course. That was the very first year I ever stood before you all. That was my question. As you have these huge losses in your golf course, and the mayor at the time looked at me and said, "But we have a golf course." So.
And I think that was Quinn.
I guess it was. I wasn't going to throw him under the bus, but I'll let you. To relate your income statement to your cash flows, just so you can kind of get everything squared in your own minds. The reason why I wanted to bring up the operating income, adding back the depreciation, over on page 21, your statement of cash flows, the net cash provided by operations, you can see that water and sewer was at $3.9 million. This is actual physical cash, and you can see that they relate to each other pretty evenly. A few differences, but pretty much. So taking your your operating income plus depreciation kind of almost gets you back to cash. So you generated cash of $3.9 million in the water sewer fund. You used cash from operations of $123,000. And then this walks you down where you spent that money on. Transfers out to other funds or in from other funds. You can see water and sewer receives $520,000. I'm sorry, golf received $520,000 to supplement it and everything else. Principal paid on capital debt, interest paid on capital debt, purchases of capital assets, so on and so forth. Just walks you down from where you started as far as operational income down to a net increase in cash in both of those funds of only $311,000 for water sewer and golf course of $34,000. So that gets us to the $346,000 that I told you the utility fund increase combined increased its cash position. So I didn't want to make. I wanted to make sure that everyone didn't see nice big $1 million numbers and think that cash. It's not cash. Well, it started out as cash, but then you paid debt obligations, you paid fixed asset purchases, things of that nature. So that's how those two statements relate to each other and interact. Okay. The notes to the financials start on page 23. Again, I'm not going to go over these in any great detail just because they really will put everyone in the room to sleep. But the ones that I think are going to be of the most interest to you, starting on page 35, note number 3. This is just a graphical representation of your fixed asset purchases, so you can see kind of what's going on for the year. The infrastructure on page 35 of almost $3.5 million, that includes, that includes the capital contribution that we've already talked about. Going forward one page, page 36, there's the utility fund. Both of them combined together, but you can see the infrastructure of $2.2 million. Again, that's the capital contribution that we've already discussed. Okay. Jumping forward to page 40, this is the discussion on the city's long-term debt. At the top of that page, yep, you too far. Yeah, you're going to go way back. No, I'm going to keep going if that's okay. All right. So this walks you through the city's debt obligations, the governmental activities at the top of the page. You can see your general obligation bond series 2016, the unamortized bond premium, so forth. A couple of notes that you had. You did pay off your capital lease in that fund. The city governmental funds ended the year with $5.4 million of debt. The business type activities, again, water, sewer, and golf, ended the year with just over $10 million of debt. You can see all the payments that you made. Page 41 is the EDC, but we've already discussed them. Pages 42 and 43 are the long-term payouts. So you can see the governmental activities running through 2036, what the cash outflows that you've obligated yourself for would be, and then on page 43, running through 2032, the cash outflows for the business type activities as far as all your debt obligations. Now this chart does make an assumption that as of September 30th, no debt change, which I know that you have already issued some new debt as of December. So those numbers are not reflective here. That is something just to be aware of. Okay. I'm not going to get into any of the retirement plan notes just because they are very long and tedious. So we're jumping ahead to page 67 now. I know, right? I'm just trying to make you sweat. Note number 12, there on page 67, is a discussion on your property taxes. This is not a required disclosure. This is actually something that our firm puts in for the benefit of the commission and for your readers. It talks about the constitutional limit that the state of Texas says you can assess some property taxes compared to where you actually are. It's a theoretical discussion that if a dire emergency were to befall the city, that what kind of room do you have to maneuver within your tax rate to generate revenue to handle situations. If you were to max out your tax rate, I'm not saying you need to do that or anything, and we're not talking about rollback elections, like I said, it's a theoretical discussion. But if you were to max out your tax rate, the city could generate an additional $17 million of revenue. So you've left yourselves the tools available to you to be able to handle catastrophes or situations as they arise. You have your cash reserves that we've talked about, your equity reserves, and you have the ability to maneuver within your tax rate to a very large degree. Note 13 at the bottom of that page is the subsequent event note. I've already talked about the fact that on December 7th of the previous year, that you did issue two new bond issuances, and those are discussed there. And truthfully, gentlemen, ladies, that is pretty much the ballgame. There's some supplemental schedules here that will let you put your eyes on every single fund of the city. Nothing really to discuss. Going to the very last page, page 81. That is the report on internal control and compliance with laws and regulations that I mentioned at the very beginning. You did not engage us to assess your internal control structure. However, we are required as a matter of standard that if we note any significant deficiencies in internal controls or material non-compliance with laws and regulations, that we have to bring them to your attention. And I'm pleased to state that there were no such issues. That does not mean your internal control structure is perfect, because that does not exist. You could throw your entire operating budget at it and never achieve perfect internal control. It's just it's a factor of the human condition. What we are saying is that we feel with the policies, procedures, and personnel you have in place, that were anything material to happen, we feel it would be caught fairly quickly. I just tried to hit the highlights for you tonight. I didn't want Gretchen to pull me off the stage. So with that, are there any questions or concerns that I can address for you?
You said net income this year was like a little over 6 million.
Net income citywide with all of the accounting stuff worked into it, yes sir, was $6.5 million.
Okay, and last year you said it was like a little more.
And this year, about that, I believe. Yes sir.
Yeah, that's why the mayor didn't remember that last year. We've had really 2 good years, so that's good.
You have had 2 good years. Now, I do want to point out.
Clarify the 2 million. That's not.
Yeah, well, I will point out that your net income there does include non-cash capital contributions. So if we factor those out of the equation, then you really only have net income of about $1 million this year.
Is that cash and cash equivalents?
I wouldn't even go cash and cash equivalents, but that's a lot closer to cash and cash equivalents.
So the $6 million includes the developer contributions?
Yes, sir.
The roads that they're putting in?
That is exactly right, yes, sir. And that totals $5.4 million this year.
Right.
So it's income in a way because it increases our assets, but it really is a fixed asset out there. It's not like we have that.
Correct.
It's used on expenditures.
Correct. If we want to factor out everything that relates to your fixed assets, which is both capital contributions, depreciation, then really your unrestricted net position, which is getting closer to cash, it's still not because of payables and receivables and things like that, only increased $541,000.
So bottom line, that was our income, if we were calling it cash.
I don't want to say, because it's closer to cash. It will approximate cash because of receivables, payables, prepaids, things of that nature. It's not going to get you to cash, but it's getting closer.
Because when we take that road, when you list that as income,
yes, sir.
In reality that becomes an expense from that day forward.
Well, maintaining it, yes, sir. It's going to generate expenses, right?
Does it?
So those capital contributions and the depreciation expense. But going back to that page 12 there, under the net position, you'll see net investment in capital assets. That's where that would have increased by. All those capital contributions from the developers, depreciation expense, anything or capital asset related goes into that line item right there. That's why I wanted to point out that the unrestricted net position, which still has all the accounting stuff in it related to your pension plans, related to payables, receivables, things of that nature, only increased by $541,000. That's not cash, but it's going to be closer than that $6.5 million that you see on your income statement.
If we were for profit.
It's still not going to be cash.
It's what a layman might call cash. An accountant can't say that. Is it what a layman would call it that?
I feel like I'm getting bogged down into
Cash is the 9.9 million that's on 11. That's our cash at the end of this fiscal year. But keep in mind that about $3 million of that, $2 million is the ARPA funds that were restricted to use for infrastructure. Over $1 million of that was what at the time we owed to Lone Star and have since paid. So really our cash position at that point in time was about $7 million.
Yeah.
Point is, the city's in very good financial shape.
Yes, that is a true statement. You are in a very good. You're increasing your unrestricted reserves and you're generating some positive cash flow across the board.
That was my point.
Yes, sir. I just want to be very careful with the terminology so that no one's misled.
John, a couple things.
Yes, sir.
One on page 68.
Yes, sir.
Just comparing budgets, and I know we've amended budgets, but just looking at what, somewhat the anticipation was on sales tax, and then where it ended up.
Yes, sir.
$500,000 difference in increase. So that's another, in my eyes, I think that's really a positive, and I think we were being conservative on the front end, but that's.
Yeah, I mean, you
And the budget's
start.
been amended, but
Yes, sir.
still, that's sure positive.
Even once it was final, it was 50,000 more than that in the final actual amounts there in the third column here at 3.02. This was the actual.
Gretchen, go up, I think, one more page.
Yeah, no, we forgot to predict, we got another.
Keep going.
95.
There you are. That's where they're at.
Or 45,000.
Yes, sir. So you had a very, very conservative original budget on your sales tax. You amended it to be a little bit closer to what actually ended up coming in. But I don't think anybody could have predicted how much sales tax across the Panhandle was going to increase. From what we've been seeing and hearing, the city of Amarillo is actually the only one who had a decrease in sales tax. All the small communities saw a pretty significant increase across the board this year.
Good deal. On that same page.
Yes, sir.
The transfers, and Joel, this may be something not just address as we're looking at comparison to budget, but the transfers we had budgeted a whole lot higher, and we've amended that, but to me, that's a pretty good deal too. I don't know if you want to speak to that.
We originally were budgeting for a lot more transfer coming in from the utility fund to supplement, and we just didn't have the revenue in the utility fund to do that level. Had we had it, we would have worked more toward wiping out the interfund due from the Gulf.
Okay.
So we would have used that had we had the cash to pay it. But with it being a wetter year than normal, we didn't make the net income.
Typically, Joel and I talk about this, in the summer months, we're usually net receiving $1 million in summer months.
Each billing cycle.
Each billing cycle, and so it being that it started off so wet, it was under that.
It was like $800,000 through most of the summer.
Okay, so there were more than one pieces there. I thought, well, that sales tax really helped there and all too, but as much as anything, we just didn't, because we had a really good rainy season last year,
Early summer, yeah.
we didn't have as much water sales too.
And because golf did have a good year, we were able to knock down that interfund due to some.
Okay.
But we haven't been able to just clear it out like we need to. We need to get that wiped out as soon as we can. So we're working toward it each year.
John, the other one, and I know we could dig in for a while, but
Okay, I'll do my best.
The TMRS.
Yes, sir.
The retirement.
69 is going to be a better place to go, Joe, I think.
Maybe page 50, is that a good place?
So 69, if you're talking about your TMRS retirement plan, I would rather look at 69, the 10-year trend.
Okay.
Because it gives you the same information, but it gives it over a
Okay.
multi-year period, so you can see kind of what's happening. As far as your pension plan goes, page 69, sir, it should have been the very next page after the budget.
All right.
Okay. So, one thing to remind everybody about, your pension plan is valued every December 31st. So even though we're looking at your 9/30/2021 audit, we're talking about the December 31st, 2020 valuation. That's why that column to the far left is dated 2020. Your pension obligation did decrease about $400,000 over the previous year. Most of that is sitting in the net investment income, and that's completely outside of the city's control. Whenever TMRS has a really good year, or even a good year, you see your pension plan come down. A couple of other things that are outside of your control, up at the top of the page where it's talking about your actual actuarially valued liability. The changes in benefit terms, you all directly control. If you call TMRS up and want to change your plan, that's where that would come into effect. The differences between the expected and actual experience, that's going to be changes in your workforce as far as number of workers average age of workers. What the actuary determined is the average mortality of your workforce. That's where all that's coming into play. Changes in the inflation rate, the economy, that's where all that's going to come into play. So I'm so excited to see what this 2021 valuation is going to be.
Mortality rate.
Pardon, sir?
Always love hearing the average mortality rate of our staff.
Don't you? I'm glad I'm not an actuary and I don't have to calculate that stuff. Like I said, the economics of the economy, the changes in inflation rate, that's where that's going to be. And then any assumptions that they build into your plan as well, which they have their standards that they have to follow. So those changes between expected and actual experience and changes in assumptions, those are all outside of your control. The thing you can affect is the benefit terms and then your contribution rates. And everything that you're doing, the city is taking excellent care of its employees. You're managing your plan well, and there's really not much more I can say about that. And you can see that when this GASB pension standard went into effect, you had a $3.3 million liability. You watched it creep up some, then come down, go back up, and then it's been coming down to the lowest point since we started this. So down to $1.5 million, you are well funding your plan.
I think that's kind of Gary's point.
Yeah, that's kind of what I wanted to point out. And I know the stock market,
Yeah.
we've had some good trends there, and then inflation stayed low. But yeah, so went from that 4 million, the 3 million to, you're right, up to 4 million, now down to $1.5 million liability. But as a percentage, and I know a lot of cities or municipalities look at that percentage, the fiduciary net position as a percentage of the total pension liability.
Yes, sir.
And, I know we've had a lot of discussions through the years where that ought to be, and I think really kind of end up feeling, even at the 90% level, we were really in good shape. But,
You really are.
But now, this is guys at 95% now, so.
You're in excellent shape. TMRS is a little bit more tight-lipped on their, not requirements, but their comfort level than the county counterpart is, the TCDRS plans. And what we're hearing from the counties, so I'm going to equate it that it's got to be somewhat similar, but what we're hearing from the counties is anything above 85% funded status, and they're extremely happy. So being at 95%, you are well taken care of.
Elite status is 97 to 98. That's like top, 97 to 98% funded.
So yes, your pension plan is going excellent. I wouldn't say change anything about it. You're doing wonderful.
Okay. Other questions for John?
Mr. Wright, would you talk about some efforts the finance department is taking in internal controls over the last 2 years?
We changed some minor day-to-day things, but probably the most significant thing for internal control has been adding a purchasing position to kind of control things before we incur them. So having Bo Boyer as our purchasing manager, I think, is a major contributor, and that's helping us on the front end and the budget control as well. Day to day, we have daily checks and backup on our daily cash collections. So each day when we close out the register, we do a reconciliation, tie everything back. That was done before, but we've kind of beefed that up a little bit. We're doing monthly reconciliations within 10 days. We've got all the bank accounts reconciled. That wasn't necessarily done that quickly before. But thankfully we've gotten, again, that's personnel. We've got I have a really good assistant that's helping me significantly with that. We've got 15 accounts, probably 10 of those have significant transactions every month, so she does a great job keeping those reconciled. And if there's something that got by us and we didn't get posted, she's catching it in that reconciliation process. And then just preparing the monthly financial, bi-monthly financials and having those available, that's keeping us square on top of things more regularly as we're going throughout the year.
Well, there's no other questions, or Joe, do you have something else?
No, I mean, in my 10 years, I've been working with auditors the whole time, and, you know, those are Pickens and Francis. Getting us done with our audit at this point in the year is very advantageous. My previous establishment, we typically would get our audit done after the next fiscal year. So instead of now, it'd be September or October before I get our financial part audit done. So I see great value in having the audit done, especially as we're gearing up for our next budget. And I think a lot of credit goes to Joel's staff, Mr.
Yes.
Ryan, and his staff on getting everything, their ducks in a row, and a lot of the efforts they do, as well as John and his staff in getting in here and getting done, for both us and ADC.
And I do want to reiterate that exact fact because it cannot be stressed enough. The fact that Joel is as prepared and his staff are as prepared as they are makes it us being able to doing the field work in late January and delivering in early March is a extremely fast turnaround.
Right.
We're usually closer to an 8-week turn, 8 to 10-week turn. So the fact that Joel and his staff are as prepared as they are is why we're able to turn it as quickly as we can. So all the credit for this does need to go to them.
I'll point out one thing that John did talk about that Joel and I work on as a team together is the management's discussion and analysis. That's on page 3.
Yep.
Joel and I really put a lot of effort in this right when he came on and kind of what we wanted to see. It's really a snapshot version. If you just need to read one thing in this and get tired of looking at everything else, this is the section to read. Joel and I help infuse the numbers, but also to kind of tell the story about what's going on. Lone Star is in there, continued growth is in there, some concepts about our community, talking about West Texas A&M and the economic impact they have. But Joel and I really marry that together, and these numbers can't tell the story, so management has to tell that story of what's going on in the community. If we didn't know the Lone Star agreement, the wastewater improvement agreement, you never know. That's an influx of money of $1 million, but it's a liability at the same time because it could be given back and is given back. So we talk about that in here. New hotel coming in, just all the things that the numbers don't say, but do correlate to. So Joel, do you have anything else to add?
No, that's a good point. And you don't see it much in here yet, but the CIP fund, there'll be a few more schedules added for our CIP program that we're putting into place, and you'll actually be able to see where that money's being segregated for those capital projects going forward.
Okay. Well,
I'll make a motion to approve the 2021 audit to Canyon, Texas for the year ending September 30th.
second. We have a motion and a second. Is there any further discussion? All in favor of the motion to approve the audit, signify by raising your right hand. Opposed, like sign. The motion passes.
Ladies and gentlemen, thank you again for your time this evening. I do greatly appreciate it. And I also want to express our gratitude again for being invited down here to come and harass Joel a little bit. That's always a lot of fun. I was trying to get a smile. I got a couple. I heard him behind me. But no, seriously, our firm's policy is one that we're here year-round for you. That if there's ever anything that we can do to help you out, please do not hesitate to give us a call. Our philosophy is that phone calls are always free, and it's easier to handle things as they arise rather than take them up 9 months later. We don't start our clock ticking until we either have to go somewhere or prepare something, so take advantage of making a phone call as often as you need to.
We did that. Joel did a budget amendment recently. We had put the ARPA money in as cash flow, and it had become clear that it needed to go in as a liability after we talked to John and put the treasury notes. So that's one thing. We do that regularly.
It does make things easier, I think. At least on us. I hope on y'all as well. So thank you very much for your time. I do appreciate it.
John, we appreciate your work and timeliness too.
Thank you, sir.
That's very helpful. So, and Joel, I think from my standpoint, the commission standpoint, we are very fortunate to have you fill in the role that you are and the work that you do, just to bring us to the standard that, you know, John talks about. There's not any other place in the Panhandle other than City of Amarillo that does that. So I think that's just kudos to you. So
Glad to be here.
thank you. All right. Takes us to item number 8. Consider and take appropriate action on appointment of auditor for City of King as financial statement audit for fiscal year ending September 30th, 2022.
I get these letters and time to give them a packet to you. I can give you a copy of that. While we're talking audit, I've gone ahead and asked John to give us an engagement letter for next year's audit. We are pleased with what Dozier Pickens and Francis does for us. One of those points being what John just said about the ability to be able to call him and ask him questions and just kind of talk through things. I can do research, I can go to the standards, but talking to someone that's been dealing with it with other entities similar to us, it's good to have someone to bounce things off of and talk through things and just see where the industry is, where the profession is on things. We also appreciate the fact that Dozier Pickens and Francis they specialize in governmental audits. That's what they do. And so we again think they're a good choice for us to stay with them in performing our audit each year. Pleased with their services. So therefore we're recommending that we go ahead and engage them for our fiscal year 22-23 audit as well. Fee increase, they do increase with about the same rate as inflation, although not inflation as we know it right now. They're usually about a 3%. They're just below 3% increase on this year. We just quoted us in this, and since I've been here, they bill us what they have put in this letter. So unless we have a significant problem, I don't foresee that would change. So we appreciate them sticking to that. So unless you have any questions on it, I recommend that we approve engaging them for next year's budget.
Mr. Mayor, I make a motion to engage Dozier Pickens and Francis to perform an audit of the City of Canyon's financial statements as of and for the year ended September 30th, 2022.
Have a motion second. Is there any discussion? If not, all in favor of the motion signify by raising your right hand. Opposed, like sign. Motion passes.
Thank you.
Thank you all. All right. Item number 9, informational presentation for addition of full-time staff member in Parks and Recreation Department. Sean?
Yes, you can see in my memo there that Ryan is, what we'd like to do in the Parks Department is we have wages, we have additional wages in our part-time staff. Ryan, you can see in the memo, we employ part-time staff there. But what we'd like to do, what our plan is to do, is to take the wages completely out of part-time wages and move that into a full-time position. And I know this is kind of mid-budget, and that's why Joe has asked us to come forward, just let you all know that we were in the process of moving that. We will move that will make them eligible for retirement, and the system that you just heard is a good system. And then that will also take care of their health care, their benefits. We'll pull all of that over next year, going into the budget. Those funds will just stay over there. So the only increase that would come into play there would be if insurance went up, or TMRS went up, or if there was a 3% merit. We'll leave all those wages over there to cover that position. So we will totally cover that position. There will be no additional funds needed this year. And again, next year, there would be no salary fund, no increase for that position, simply any increases that we got across the board for everybody would be needed. So we're able to create a full-time position, which I think is important to give Brian that, be able to offer those benefits to somebody and hopefully keep people a little bit longer there in that position.
And Brian, you can get as much work done out of the one as you can with the part-time ends. I think it's been a challenge getting part-time. Is that part of the issue?
Well, with the new labor laws, it's pretty tough to keep anybody for 29 hours. Nobody wants to work for 29 hours, and that's our top of, we can employ somebody that is part-time without moving them to a full-time position with benefits. So to keep the staff that I got, it's a really good staff, I wanted to move part-time money over to full-time and make one of my part-time people full-time just to keep them. We did have one person leave, so we have two people that are part-time. We're moving both of those. One to take the other person's place and into this new position also.
To be able to lock up two quality people is
Yes.
what we're moving toward now, locking
That's
those
right.
people down and keeping them. And again, it's the 29 hours. It's difficult. It's very difficult for someone to, you have to really want to be part-time. You know, if you're trying to make a living at 29 hours, that's not anything you can do. And we've had the discussion of, the way Brian and I talk about that is the number of weed eaters. You know, we say in the summer, do we need 7 weed eaters going? You know, and with this, is this going to be a couple of less weed eaters? It is, but it also means that we're going to have some quality people that we're locking down and hopefully be able to manage that. We'll still have the same number of the budget. Brian's already looked at what that leaves him in the budget and also what it leaves him for the summer.
And he does get some part-time still left.
Yes,
There's
there is still plenty of part-time wages there to cover him from the summer. So we just want
No
to be
action
aware
on
of that.
this, just information.
Any other questions? All right. Thank you. Item number 10, consider and take appropriate action on the lease agreement for Parks and Recreation maintenance equipment. Bob?
Yes, thank you, Mr. Mayor. We're focusing on the Parks Department. We are looking to enter into a lease agreement for 6 new grounds maintenance equipment the items that are currently in use are transferred over from the golf department and are reaching the end of their useful life. So what that means is eventually we're going to be paying, or anticipate to pay, higher maintenance fees and things like that. So to avoid that, now is the time to replace these equipment before the need arises. The company the vendor that's providing this equipment is Professional Turf Products. The actual leaser that we're looking to enter an agreement with is the Huntington National Bank. All the equipment combined, that principal amount is $229,257.96. That is a price provided from Sourcewell, so it is a cooperative purchasing pricing there. It's a 6-year lease with 6 annual payments. Those annual payments would be $42,138.44. What we have currently budgeted for those payments is $51,500. So it is well below what we have budgeted for this equipment. The interest rate on that lease is 4.09%. And as you see there, you can see how much total terms of the lease, how much we pay in interest now, total amount of payments being made there. I did also want to make a special note. There is another purchase being made for parks equipment that is below the $50,000 limit for additional approval. I just want to make sure that y'all are making an informed decision that there are also 2 other utility vehicles being purchased, not leased, purchased. Those total coming to $25,744.24. We are also looking to sell at auction one of the items, a mower that is being replaced that will then be sold at auction, and the proceeds from that sale will also be able to help offset these costs.
good detail.
Thank you.
So I guess the anticipation is we would keep this 72 months and we'd keep these pieces of equipment that term of that lease then. So
That is correct. That the useful life of these equipment are at that 72 months or beyond.
Brian, you've done this how many times now? You've done it a few times.
This is the third time.
Third time. You've done renewal on this.
The actual, some of those are mowers. Most of the stuff we're buying this year will be long-term machines for us. Some of them up to 10, 12 years. Some of the stuff that we're replacing is 10 or 12 years old.
any other questions for both? If not, I would entertain a motion.
I move that we authorize the city staff to enter into a lease agreement for parks and recreation grounds maintenance equipment with the Huntington National Bank for the principal amount of $229,257.96.
Second. Have a motion and a second. All in favor of the motion, signify by raising your right hand. Opposed, like sign. All right, well, thank you. All right. Item number 11, consider and take appropriate action on ordinance number 1151, annexing territory to the city of Canyon or Canyon East Unit number 10, requested by Coleman and Son, LP, an ordinance of the city of Canyon, Texas, annexing the territory herein to the city of Canyon in Randall County, Texas, extending the boundary limits of the city of Canyon to include the property herein described within the said city limits, granting to all the inhabitants of said property all the rights and privileges of other citizens and binding said inhabitants by all the acts, ordinances, resolutions, and regulations of said city. Danny?
Danny is not here. So, he's in Houston at Building Professionals Institute learning. He and Craig both. Just follow up. We've gone over this quite a few times. This is kind of the last unit in Canyon East. You can see it displayed right there on the screen. These will be, I believe, half-acre lots with septic. They'll be on water, but they'll be half-acre lots because they'll all have septic. This probably will be the last piece of Canyon East.
It's curb and gutter, even though it's half of the
Yes,
lot.
it's still curb and gutter. They haven't changed the subdivision design and layout, so it'll also be curb and gutter. And it won't, unfortunately, I don't believe it will tie into the existing road system. It'll just come straight from the access road. There will be one tie-in maybe right there on the first, I think it's the street. Right there and coming in, right there by Brandy Lane. Brandy Lane, so. A little bit larger lots. This is the last piece for annexation on this. We'll be done.
Mr. Mayor, I move we adopt ordinance 1151 annexing property as requested by Coleman.
Have a motion and a second to adopt ordinance number 1151. Is there any further discussion? All in favor, signify by raising your right hand. Opposed, like sign. The motion passes. All right. Takes us to item number 12. Consider and take appropriate action on ordinance number 1153, an ordinance of the City Commission of the City of Canyon, Texas, amending the Code of Ordinances of the City of Canyon, Chapter 96, by deleting Section 96.02, City Recreational Vehicle Park, providing that all ordinances or parts of ordinances in conflict herewith are expressly repealed, providing for an effective date. Don?
Yes, those of you that have been in Canyon for a while, remember when there was an RV recreational vehicle parking area available off of 4th right over there, which currently houses, I guess, Chickadee and Bellman's, and all of that right in that location. we were just going through and trying to clean up the ordinances, and that was still in there. And so we decided we'd go ahead and delete that and clean that out, since we no longer have that part.
Gretchen's been working on codification for a while now, and I think in looking at that, this kind of came along. Is that fair to be said? So we should do it.
I move that we adopt ordinance number 1153, an ordinance amending the code of ordinances for the city of Canyon, chapter 96, by deleting section 96.02, city recreational vehicle park, providing that all ordinances, parts and ordinance in conflict herewith are expressly repealed.
Second. Have a motion and a second. All in favor of the motion signify by raising your right hand. Opposed, like sign. The motion passes. All right. Item number 13, first reading of ordinance number 1154 for the renewal of Excel Energy franchise agreement. And Joe, you're reading this, is that correct?
Thankfully, our awesome city secretary has recorded it. So we'll, per our city charter, we have to verbally read a renewal. And so we have it recorded, so you don't have to listen to us read it.
But it is 20, I'll try and speed it up. It's 25 minutes long.
So there are things in front of you to chill out. Yes, you may go to the restroom. Real fast.
It's all the.
There's a quiz, one quiz.
And if you need to go during, Kelsey, it's okay too.
Y'all can eat, do whatever.
So, unfortunately, we're going to go out and play this. That should be it. So.
Oh, no, it doesn't work here.
Franchise agreement, an ordinance granting to Southwestern Public Service Company, SPS, doing business as Excel Energy, the right, privilege, and franchise to conduct along any and all of the present and future performers and other distribution and transmission equipment, facilities and appurtenances necessary or proper for the transmission and distribution of electricity into, in, within, from, across, and within the city is now existing or as said city limits may hereafter be extended, and granting SPS, its successors, and assigns the authority to use such for the purpose of transmission, distribution, delivery, and sale of electricity to the city and to the inhabitants of the city or any other person or persons, firms, or corporations wherever located within or without the boundaries of the city, for use by such purchaser or purchasers for any purpose authorized by law for which electricity may be used or for any other purpose or use which is or may become normal or customary in the retail electric industry in Texas, providing that this franchise shall be effective for a period of 20 years commencing May 15, 2022, providing for the temporary removal, raising, or lowering by SPS of its wires and other appurtenances, providing for the right to and condition of the opening of pavements and sidewalks by SPS, retaining all rights of city to regulate the location of SPS's facilities in, upon, along, under, and over the streets, alleys, and other public places of city, as well as to require the relocation of same, providing for efficient electrical service and the maintaining of SPS's facilities, and compensation and method of payment of such to the city for use by SPS of the streets, alleys, and public ways of the city, providing for the maintaining of records by SPS with right of inspection by city, reserving to city all powers of regulation, prohibiting assignment except by consent by city, except in certain cases, giving city's consent to the cutting and trimming by SPS of conflicting trees, providing a severability clause, providing that this franchise shall not be exclusive, making miscellaneous provisions relative to this grant of franchise, repealing all previous electrical lighting and power franchise ordinances, providing for the acceptance of this franchise ordinance by SPS. Whereas the city has previously granted to Southwestern Public Service Company, SPS, a franchise to operate and maintain an electric system in the city of Canyon.
Whereas SPS has requested that the City Commission of the City of Canyon, Texas, City Commission, grant an electrical lighting and power franchise at this time, and it appearing to the City Commission that the renewal of the franchise will be out of benefit to both SPS and the city. Now therefore be it ordained by the City Commission of the City of Canyon, Section 1, franchise authorization, that subject to the terms, conditions, and provisions of this ordinance, the City of Canyon, Texas, hereinafter referred to as City, does hereby grant unto Southwestern Public Service Company, a corporation incorporated under the laws of the State of New Mexico, having a permit to do business in the State of Texas, hereinafter referred to as SPS, its successors and assigns the right, privilege, and franchise to conduct an electrical lighting and power business within the boundaries of the city, as such boundaries now exist or may hereafter be extended. SPS shall have the right to enter upon, erect, construct, maintain, extend, repair, replace, and remove in, under, upon, within, over, above, across, and along any and all of the present and future public roads, highways, streets, lanes, bridges, alleys, and other public rights of way of the city, now or hereafter owned or controlled by the city, a system of poles, pole lines, towers, distribution lines, transmission lines, underground and above ground lines, wires, guys, cables, conduits, transformers, and other distribution and transmission equipment, facilities and appurtenances necessary, proper, or reasonably needed for the transmission and distribution of electricity into, in, within, from, across, and through the city as now existing, or as the boundaries of the city may hereafter be extended to the extent the city is authorized to grant such right. SPS, its successors, and assigns are authorized to use said poles, lines, towers, wires, guides, conduits, transformers, and other distribution and transmission equipment, facilities, and appurtenances for the transmission, distribution, delivery, and sale of electricity to the city and to the inhabitants of the city or any other person or persons, firms, or corporations wherever located for use by such purchaser or purchasers for any purpose authorized by law for which electricity may be used, or for any other purpose or use which is or may become normal or customary in the retail electric industry in Texas. Section 2, term. The franchise granted to SPS shall be for a term of 20 years from May 15, 2022. The franchise rights and privileges shall be in full force and effect 30 days from the last publication of this ordinance, provided SPS has formally accepted this franchise as provided in Section 20. Section 3, franchise fee payment, is compensation and rental for the use of the streets, alleys, and public ways of the city in the conduct of its business under this franchise. SPS shall pay the city for the life of this franchise a sum of money equal to 5% of its gross receipts. The term gross receipts shall mean the total monies received by SPS from the sale of electric energy to its retail customers within the corporate limits of the city. A 2% franchise expense, which does not include franchise expense associated with net miscellaneous revenue, is currently embedded in SPS system-wide rates. That all franchise expenses in excess of 2% of gross receipts shall be surcharged by SPS to the customers taking service within the corporate limits of the city. The franchise payments shall be due and payable within 30 days following the end of each calendar quarter in which the gross receipts were collected. All money due and payable to city by SPS computed under the terms of the existing franchise shall be payable at the time that computation begins under this franchise. In other words, there shall be no gap in payments to the city between the termination of the existing franchise and the commencement of this franchise. Said quarterly payments above provided shall be exclusive of and in addition to ad valorem taxes. Any and all such payments made by SPS pursuant to this section shall be credited on any amount imposed, levied, or assessed against SPS by the city, pursuant to ordinance or otherwise at any time as a charge, whether designated as rental tax or otherwise, for the use by SPS of the city streets, alleys, and public rights of way. Section 4, pole location. Within the streets or other public rights of way of the city, the location and route of all poles, stubs, guides, anchors, lines, conduits, underground duct lines, manholes, and cables placed and constructed and to be placed and constructed by SPS in the construction and maintenance of its electrical lighting and power system in, within, through, or under the streets, alleys, or other public rights-of-way of the city shall be subject to reasonable and proper regulation, control, and direction of the city or of the city official to whom such duties have been or may be delegated. All poles, guys, or anchors erected by SPS shall be so set that they will not cause diversion of surface waters in any gutter or drain so as to cause damage to adjoining property, and so that the same will interfere as little as practicable with the ordinary travel on the streets, sidewalks, and other public rights-of-way of the city. The regulation and control herein reserved shall include without limitation the right of the city to require SPS at SPS's expense to relocate its poles, lines, or conduits so as to permit the following activities undertaken by the city on its behalf. A, the widening or straightening of any street, alley, or public right-of-way located within the city. B, the closing, opening, or relocation of any street, alley, or public right-of-way within the city. C, the location or relocation of any water or sewer lines within the city. D, the changing of grade of any street, alley, curb, or sidewalk within the city. E, the construction and maintenance of parks and other public improvements owned by the city located within the city. In all cases where SPS is required to relocate, change the route of, or the position of the poles, lines, or the conduits as a result of a request by the city shall furnish an alternate route on which poles and lines of light construction design may be built, and provide 90 days advance written notice to SPS specifying a new location, route, or position of the poles, lines, or conduits involved. SPS shall be entitled to be paid for its cost and expenses of any relocation, raising, or lowering of its wires required by the city pursuant to this section or section. Only if such expenses or costs are reimbursable or payable to SPS or the city from any source, including the state of Texas, the United States, or any governmental agency or subdivision of either, whether directly or indirectly. However, nothing herein shall impose any obligation on the city to pay such costs and expenses except to the extent it actually receives funds from another source, including the United States, the state of Texas, or any governmental agency or subdivision of either, for the reimbursement or payment of same. The provisions of this section shall not apply to improvements made by SPS on private easements purchased by SPS and recorded prior to any dedication of any street, alley, or public way. In this latter event, the city shall reimburse SPS its costs and expenses of relocating facilities. Section 5, temporary relocation. SPS, on written reasonable request of any responsible person, firm, corporation, or governmental authority, shall relocate, raise, or lower its wires where located on, in, or over the streets, alleys, and other public ways of the city, temporarily to permit construction work in the vicinity thereof, or to permit the moving of houses or other bulky structures. The expense of such temporary relocation, raising, or lowering of such wires shall be paid by the benefited party or parties, and SPS may require the payment in advance, being without obligation to remove, raise, or lower its wires until such payment shall be made, provided, however, that no such payment shall be required of the city except as provided in Section 4. SPS shall be given prior written notice to arrange for such temporary wire relocations. The time period and manner for providing prior written shall be as specified in SPS's tariffs governing temporary raising or lowering of lines and may be amended from time to time. Currently, rules tariff sheet number B-32. Currently, rules tariff sheet number B-32 requires at least 7 days prior written notice. Section 6. Excavation of sidewalks. If it becomes necessary in furnishing electricity as contemplated in this franchise, the city grants to SPS the right and privilege to take up pavements and sidewalks, if any, in and upon such streets, alleys, and highways in the city for the purpose of making such excavation and installation as may be necessary, provided, however, that SPS shall not take up or excavate any pavement at any time without first securing the written permission of the city manager or designated representative, which permission will not be unreasonably withheld, and provided further that all excavation and installation so made shall be performed in a reasonable manner as will cause the least inconvenience to the public, and SPS shall promptly restore or cause to be restored to as good condition as before working thereon all such pavement, sidewalks, streets, alleys, or highways excavated by it to the reasonable satisfaction of the city manager or designated representative. Section 7, facilities damage. If any facilities of the city shall be in any respect damaged or injured by SPS or any of its officers, agents, or employees in connection with the performance of work done under this franchise agreement, then SPS shall pay for such damage. Conversely, if any of the facilities installed by SPS hereunder shall be in any respect damaged or injured by the city or any of its officers, agents, representatives, or employees in connection with the performance of any work or repairs, avenues, alleys, and other public places of city stock. Granting of this franchise to surrender or consent lose for less than the law hours now or hereinafter the city under the Constitution and statutes of the state to regulate the rates for services of the SPS. SPS by its acceptance of franchise all such lawful regulatory power and rights obtained from time to time vested in the city in force and subject thereof the city's all future laws, ordinances, and except when such compliance is shall serve every customer in the franchise area that requests to lawful policies and rules of SPS regarding the cost, return investment, and access, and other reasonable factors.
Maybe the link between there.
Discriminate against any person, corporation, in control for such a or in the rendered circumstance. SPS should not direct or indirectly discount or rebate the value of certain directly scheduled the appropriate regulatory section 10. Nothing contained in this ordinance shall be construed as conferring any exclusive financial blessing audited prior to account. Section 12, indemnification. SPS can save the city harmless from all claims, demands, or causes against the city occasioned by or arising out of construction, maintenance, or repair of SPS's electrical lighting or in any way growing out of the granting of its franchise directly, provided however the provisions of the section to any claims, damages, actions, or causes of action resulting from the
When we got the
city
franchise agreement from them, they had to send us a recorded version of this.
otherwise liable is provided here.
Yeah, it was Sam Elliott.
Granting franchises
I want to get this, I want to talk to
is by law
You can spank it. Spank it, how can you do this? Spank it, can you do this under 20 minutes?
duty and undertaking
Or
for the
here, get it
performance
going.
of is reserved.
Do that fast,
This grant
Doctor.
is made subject to all the rights, regulation, or otherwise reserved to the city by laws of the state. Section 14, assignment. The rights, franchises, and privileges hereby granted shall be owned by SPS, except with the consent of the city commission ordinance passed by said city commission, provided, however, or pledge its rights hereunder for security or obligation, and provided further that a transfer could be made in a merger or reorganization proceeding to which SPS is temporary corporation or affiliate corporation of SPS sells its entire fiscal assets. In transfer this franchise under the terms of this section or reorganization proceeding or transfer of its entire, provide the city commission an opportunity to consider the proposal concerning proper acceptance of the terms of this franchise, which expenses arising because of lack of contingent upon the faithful and punctual performance of and compliance requirements and provisions of this ordinance, and any SPS, its officers, agents, and employees on its part with abided by, and if at any time SPS shall comply with and abide by all and singular the act and provisions of this ordinance or any amendment within 60 days, written notice from the city manager, or designated representative of the city commission setting forth in detail the facts. Section 17, removal of debt. The city should reasonable means and methods to remove same at expense of STS, all without compensation. Yes. Section 18, severability. Subsection, sentence, clause, or phrase of this ordinance unconstitutional, void, or invalid, or for any reason. The validity of the remaining portions of this ordinance should not be amended. Section 19, prior franchise repeal. This former franchise ordinance is granted to SPS or its predecessor. I repealed, which repeal is effective as of granted takes effect. There's specifically in particular as of that time that certain ordinance 1154 granting to SPS its successfully assigned period of 20 years. Section 20, SPS shall within 30 days from the date of the final passage of the commission file with the city secretary a written statement in behalf be passed by the city committee of Canyon 422 and agrees to be bound by all of its terms and provisions. Serviced by President of Texas and New Mexico. So ordered, read in accordance with the city. Section 3.17 by the City Commission.
It was fine when we listened to it?
With a quorum of such commission duly and lawfully assembled
That's what it is.
on the 7th of March, 2022.
Yeah, you can just write that,
Signed by Gary Henders, Mayor, attested Secretary Gretchen Mercer, and approved by read in accordance with the Canyon Home .17 by the City Commission of the City of Canyon. President of such commission duly and lawfully assembled. And on the 21st of March, 2022, Gary Henders, Mayor, attest Gretchen Mercer, City approved Chuck Hester, City Attorney. And adopted in accordance with the Canyon Home Charter, Section 3. By the City Commission of the City of Canyon, Texas.
This is the way
Lawfully
you took it that I was
assembled
sorry.
and voting on the 3rd.
We were
4th
debating.
of April, 2022, City of Gary Henders, Mayor, attest Gary approved Chuck Hester, City Attorney.
Well, I think we're there. Everybody's not asleep. Well, thank you, Gretchen. That's a lot.
That was beautifully done.
Thank you. All right, well, that is the first reading of 3, so we'll have those to look forward to. That takes us to item number 14, executive session pursuant to 551.071, consultation with attorney, and 551.087, economic development negotiations. I have 6:01, and at this time, we'll adjourn into executive session.
Next time I'll try to do it.
Try to what?
Put it to music.
I can do it. Yeah, listen. So much.
Megan, you can have her.
Oh, and if y'all aren't going to keep your audit book, we can get those back to Joel.
Yeah, if you're not gonna use them, please.